So this was me when I was 16 years old. Back then, I was working long hours in a supermarket. I mean, for just few dollars an hour. At that point, my supervisor, man, she was like brutal. So every shift, it felt like a nightmare for me. It was really horrible. So then I remember thinking like, is this it? Is this what my life is going to be like? One day, something clicked. I realized that, hey, if I don't make a change, I'll be stuck in this cycle forever. So I don't just want to survive. I wanted to thrive, right? So that's when I discovered trading, right? So I started reading, learning, practicing, backtesting, live trading. I was failing, learning, failing, and learning again, and then failing again. So, at that point, I was 16, right? So it was like really in the early days where YouTube wasn't even here yet. So, long story short, fast forward a few years later, everything kind of changed. From me barely making $5 an hour working in a supermarket to making hundreds a day, and then to 4 figures a trade, then 5, then to making 6 figures a trade. So this is the glory part, right? But I'm going to be real, okay? Trading is not easy. If it is, 90% of the traders wouldn't fail. So even among the 10% of the traders who made it, only the top 1 to 2% of this 10% are truly making a lot of money. So in this video, I'm going to be doing something different. You wouldn't be seeing me flexing profits, no. You will see exactly how I went from a struggling trader to becoming a break-even trader, and then to becoming a highly profitable one, right? So in this video, I will break down the exact steps for anyone who are to say losing money right now, right, to making decent money, and then the system to go from making decent money to making a lot of money, right? So it's kind of like going from 3 figures per trade to 4, then to 5, and then to 6 and more, right? So this is the roadmap, right, for anyone who is serious about becoming successful in trading, right? This is not your typical YouTube video, right? So if you are serious in wanting to make trading strong source of income, you will want to watch this. Here's the thing, the business behind trading. And in order for us to be successful, we have to have the system. So like I said, it is truly more than strategies. If you think about it this way, there's so many YouTubers out there, there's so many gurus out there, or people who teach strategy. So when they teach the strategy, when they show you the strategy, apparently, obviously the strategy is working, right? If not, they cannot show you the strategy, right? But here's the thing, you go ahead and take the strategy and you apply on yourself. Somehow or another, you don't reach the same result as them. And then you're like, the strategy doesn't work. And then you find another strategy. Then you do the same thing. And then after a while, it's not making you money. Then after that, I'm going to try another strategy. Then another one. Then after that, this doesn't work for me at all. So the point that I want to drill is that trading is more than strategies. There is a proper business behind it, and this is what we're going to dive into. That is called risk to reward ratio. If you're new, this is probably an important topic for you. If you're experienced, you already know this, but hey, I show you there's somewhere that you are not doing it correctly. 95%, I would say 95% of the time, I look back at all the experienced traders, 5 years, 10 years, 15 years, 20 years. I look back at all the experienced traders. It is not the strategy that is wrong. It is the base foundation that is wrong. This is what risk to reward ratio means. All right, risk to reward ratio. So this is a chart whereby in the trading chart. So these are all the candlesticks, right? So for example, let's say I see this bar over here, right? Let me just make this bigger so everybody can see. So let's say I see this bar over here. In this is called pin bar, right? This is called pin bar. It's called in candlestick. This is called doji, right? So doji means what? If it's a downtrend, doji potentially means a reversal, generally speaking, right? Obviously there's more to that, but hey, for simple sake, I just want to explain risk to reward ratio real quick, right? So this is a doji, this is a pin bar, right? So for example, if I see a doji, if I see a pin bar, right, I want to enter at the close, right? So this is my entry. So this is the tail of the pin. So usually it is always good to place your stop loss below the tail of the pin, so that, hey, if the market goes down, when it pulls back up, there's still room for you to run, right? But if the market goes below your stop loss, and this is doji, more often than not, the market is going to go down further. What does that mean? It means that, hey, this doji is not working out. That is also the reason why you want to place your stop loss there, such that you don't just want to, like, okay, trade without a stop loss and the market just keep going down all the way and that's it, right? Your account will get wiped out, right? So therefore, every trade should have a stop loss, right? Every trade should have a stop loss, okay? So let's say entry here, stop loss here. If I drag it down, you will see this number, 823, right? So ignore the last decimal place. This is 82 pips, right? So 82 pips, if it's the risk, this is the risk, right? So meaning to say that if the risk-reward ratio of 1 is to 1, what does it mean? My risk is 82 pips. If it goes up 82 pips around here, right? Around here. If it goes up 82 pips to this level, it means what? If I risk, say, $200, I make $200 from here, right, to here, right, about there, right? So this is the risk-reward ratio. So if it goes up more, then I make more, right? So, but 1, if the risk-reward ratio is to 1, this is what I mean by the risk-reward ratio. So from your entry point to your stop loss, and then you'll be like 82 pips, there is 1. So entry point to, let's say, to your take profit level, if it's same number of pips, the same number of distance, that is 1:1. What does this mean? All right. So typically, it's really important that most people don't think about as well. I always group my set of my trades into a set of 20. 20, 20, 20. What does that mean? Meaning to say that when I enter 20 trades, I group them, I lump them into one group, right? So I track them. When I trade the next 20 trades, I lump them in one group, I track them. Okay, why? Here's the thing. In that set of 20 trades, there'll be winners, there'll be losers, right? You wouldn't win all, right? Or you wouldn't lose all, right? No matter how good you are, there will always be losers. When you group your trades, right? Sometimes we get lucky. Sometimes, like, we pick a trade, we got lucky, the trade went our way. Sometimes we pick a trade, we got not so lucky, the trade didn't go our way. But when you group your trades into a set of 20 trades, right, it's beyond luck already. It is skill. Because your luck eventually runs out. So that's the reason why I group my trades into a set of 20. Right? I group my trades so that I can track it to make sure that I'm on track. So generally speaking, the luck will run out every set of 20 trades, right? Plus minus your win, your losses should be about the same. Plus minus about the same, right? Not too far. If there is a set of trade that is kind of like different altogether, right? Which may happen, sometimes there are months whereby, whoa, you make big money, right? But if your losses should be all about the same, right? So it should stay pretty consistent, all right? If there's a set of trade that's pretty erratic, a good chance your emotions got into the way, you are risking a higher risk percentage on that trade, or you're taking way more trades than you shouldn't have taken, so something went wrong down there. Got it? So this is how we group our trades itself. Every trade you enter, your risk-reward ratio is 1:1. How we saw earlier, meaning to say that your entry to stop loss is, let's say, this number of pips, your entry to your take profit is the same number of pips. So it's 1:1. If every single trade you enter 1:1, meaning you say I don't make more, I don't lose less, every single trade I enter, I win, I risk how much, I want to win how much. Okay? Right? Now, if you flip a coin, right? 50-50, meaning to say that at any single time I enter the trade, my risk is the same, my reward is the same. I flip a coin, the edge in my trading system, I just kind of guess. So usually what? It's 50-50, right? Plus minus, right? It's 50-50. 50% I win, 50% I lose. So same thing in a set of 20 trades. If we lose half of it, we lose 10, right? So we risk $200 per trade, right? $200 times 10 is $2,000. So we lose $2,000. Okay, so far, because our capital is $10,000, right? We risk 2% per trade, so that's $200 per trade. Every trade we risk $200, right? So now if we lose 10, it means $200 times 10 trade. So we lost $2,000. Right? Now, like I said, 50-50, right? In a set of 20 trades, we win half, we lose half, right? So we win the other 10. So we win $2,000. Meaning what? Hey, we are a break-even trader, right? Only. Alright, so now next. Obviously, we don't want to trade 1:1. What's the point of trading 1:1, right? When we trade, we want to have an edge in the market. So which is why I always tell my students, hey, every single time you trade, there has to be a minimum of 1:1.5. Meaning to say that, let's say, if we risk 80 pips, right? Just now we saw like 80, right? So I don't just make 80. I want to make 80 times 1.5. I want to make 140 the distance. So for example, if my distance is 20, my entry point, my distance is 20, T is to 20, right? So 1:1.5 is 20 is to 30, right? So that is just one of the main reasons why we want to trade. We want to trade every single time when we enter a trade, we need to win more than we lose. That is the goal. So same thing, if we do 50-50, right? If we lose 10, $200 times 10 trade, we lost $2,000, right? But if we win 10, $200 is not enough. 200 times 1.5, we $300 per trade. We win $300 a trade based on our risk to reward ratio. So 300 times 10 is $3,000. So meaning to say that even if you are 50-50% trader, you're still profitable, right? So your win rate isn't fantastic. It's just 50%. All right, here's why. All right, so generally speaking, all right, 1:1, right? 1:1. First one, I enter a trade. I aim 1:1. Okay, good. Second one, I aim 1:0.5. Okay, I'm going to show you in a while why some traders get 1:0.5. Next one, aim 1:1.5. Next one, I get 1:0.3. Next one, I get 1:0.7. All right, so here's the thing. Let's run it out first before I explain, right? So first trade. So you enter the trade didn't go up 1:1, the trade come down right away, you take a loss, right? You risk 2% per trade, you risk $200, you take a loss of $200. Second trade, the market, what happens? The market went up. So here's the thing. The market went up. So if it's 1:1, the market go up, but it didn't go up to 1:1, it go up to only 1:0.5. But then you say, but not then you say, but then you be like, it goes up, and then you be like, yes. So it goes up, maybe it goes up to 0.5, 0.6, 0.7, 0.8. That's good. It's aiming my 1:1, for example. Then after that, the market starts going down. 0.7, 0.6, 0.5. And be like, no. So what happens? What? You want to secure your profits. I think the market is going to reverse, right? I better get out first before the market reverse. So what happens? Right? At least I make $50. So that's what happens. You get out a trade, even though you plan higher, but you get out the trade at 0.5, at $50. So now, the next trade, you aim 1:1.5. Okay, EZQ say aim 1:1.5, right? So I aim 1:1.5, but the market didn't go up 1:1.5. The market went up a little bit, dropped down, loss. The next trade, you went up. Then after they drop, same thing, you get out at 0.3. The next one, you went up at 0.7. Your take profit is at 1:1, for example. At 0.7, you think that, hey, I better play safe. I get out at $70. I'm happy already. So now, if you think about it like that, there are a total of 5 trades. 1, 2, 3, 4, 5. 5 trades, you what? You lost 2 trades, you win 3 trades. Hey, by default, if somebody asks you, what is your win rate? Oh, I'm winning 3 out of 5 trades. They'll be like, oh, you must be a fantastic trader. But in reality, you are like, no, I'm a losing trader. These 3 trades, I made what? 70 plus 30, 100 plus 50, 150. I made 150 trades, $150, but I lost $400. So even though I win 3, I lose 2. I'm still a losing trader. I only make $150, but I lost $400. Right? So this is, a lot of times, this is the reality in trading. Right? Now, EZQ, I learned. No more, I will no longer get out and eat peanuts. 1:0.5, 1:0.3, 1:0.7. No. I'm no longer going to do that. I'm going to take what you taught me. Every single trade, I'm going to trade at 1:1.5. That's my goal. Every single trade, I aim 1:1.5, 1:1.5, 1:1.5. Either I hit my take profit or I hit my stop loss. All right, and then I let the odds run down. So now let's see what happens. Okay, so now first trade, the market you enter, the market straight away drop. Hit the stop loss. The second trade, the market entered, the market zigzag, went up. There's a win. The next one was a loss. Next one was a win. Next one was a loss. Next one was a win. So now, same theory. You win 3 trades, you lose 3 trades. 369. You won 3 trades, you made $900. You lost 3 trades, you lost $600. So you still make money. Right? So we are heading somewhere. I'm bringing you slowly to where we want to go. So we are heading somewhere already. Now, see this trade. Let's say this pin bar, right? So same thing. If we enter on this pin bar, the stop loss is here. This is 84, like 82 pips, right? Just now we said 82 pips. If I just aim at the previous high here, too far, right? I'm not being too unrealistic. I'm not aiming at like some previous high. I'm just aiming at the previous high here. So if from the high, I go up to here, that is 131. So what? That is already 816, maybe 1:1.5 or so. If I aim it a little bit higher, here is already 1:2. Right? Here is already 1:2. Now, if I aim, let me zoom out a little bit. Right? If I aim, right? So here, if I aim here, right, at the previous high to our entry point, 816.24. This is already about 1:3. But that is also the fact that my stop loss is so big. But if I drop my stop loss, if I lift up my stop loss to, let's say, below the previous red bar, then I'm going to make a whole lot more. So what I'm trying to say is that now, as we progress, you're going to get better in your trading, right? So if we come back to our slides here, now, when we trade right now, as you progress in your trading, you can start aiming for bigger wins, bigger take profit target as in, right? So you start aiming for 1:4, right? 1:3, 1:2.5, nothing too crazy. Sometimes you're like, ooh, I spotted this trade that can go 1:8. And okay, I got another one that I could go 1:5, right? So let's run it out. Let's run it out because you are now kind of being what? Aggressive. Maybe you're kind of being aggressive. So like, hey, Ezekiel say must make big money, right? I must aim for big RR, right? So what? I'm trying to be more aggressive. So I'm aiming for the big RR right now. Okay, so what? So here's what happens, right? The first one, instead of going up, the market dropped down. You lost 200. The second one, the market went up a little bit, didn't hit 1:3, dropped down. You lost 200. The third one, the market went up a little bit, dropped down. You lost 200. The fourth one, the market didn't even go up, dropped all the way down. You lost 200. But then the last one, you won. So, hey, this is real. In reality, when you're aiming for something further, bigger in that sense, and it's honestly, it's not too crazy big also. Like there's 1:3, 1:2.5, 1:4. This is like a daily thing. It's nothing too crazy. 1:8. Okay, stretching a little bit. We're stretching a little bit, right? 2.5, 3, 4, sometimes 5. It's pretty okay. It's pretty okay. Now, because we are stretching, or let's say if you are new, you are kind of stretching a little bit because this is not your trading system. You're stretching a little bit. Your win rate is not going to be great. So if you look at it, you're winning 1 out of 5. Your win rate is like what? 20%. 1 out of 5, right? Your win rate is like 20%. It's not good. So if somebody asks you, hey, what are you doing? Oh, I'm trading. So what? How's your win rate? Like how many trades are you winning? I'm a 20% trader lah. I win about 20% of the time. Wow, you're not so good My friend win just now that friend win what? 3 out of 5 trade. You only win 20%. But hey, my 20% win rate covers the 4 losing trade. If I run this out, you as a 20% win rate trader, that sucks. But you still make money. You see what I'm getting? Trading is more than strategies. There has to be a system behind it. So right now, like I said, you have only a 20% win rate, but you're actually a profitable trader. All right. So now let's say, okay, now you evolve, right? You start trading more, you start practicing more, you start looking at the charts more, you evolve, right? You evolve to become a better trader. So now, when you evolve to become a better trader, right, what happens, right? You have more chart time, right? You get to know the pair better. Here's what happens, right? First trade, didn't go up 1:4, you lost. Second trade, here's what you learn. You learn something new already. Ezekiel, I learned how to move my trade up instead of taking a full loss. I have learned how to take my trades. If the market is going down, I learned to move my trade to break even. New skill unlock. All right, if you're new, this is break even. So okay, quick one. Just want to show you how to move your trade to break even. So say for example, so let's say here, right? So by default, you entered at here, right? You entered here. So I'm just going to put some entry. You entered here, right? Initially your stop loss is here. So let's just say for example, right? The market goes up, and then okay, let's say our take profit we aim pretty far, right? The market goes up, and then after that market goes down. So if let's just say this market toppers all the way, what happens? Instead of you taking and letting it topple, you move your stop loss now. Initially your stop loss here. You move your stop loss up to your entry level. So meaning to say that if the market comes down, instead of you getting stop out, you hit it to you hit your break-even level. So you don't win, you don't lose. So that's kind of what I meant by, okay, you have learned to secure your wins, or at least secure your risk, so that it becomes what? So what I always say is that it becomes a free trade. Meaning to say that once the market starts going up, in this case, the moment once the market starts going up, I'll move my stop loss from the bottom to be below this green bar. So it becomes a free trade. Meaning to say what? Whatever the market does after which, right? Or if that's fantastic, I make a lot of money. If the market decided not to go up, the market decided to go down, I don't lose anything. It becomes, I don't win anything, I don't lose anything. It becomes a free trade. So the goal of trading is to make a lot of trades to become free trades. New skill unlocked. All right. So now I've learned the market is going down. Right, it's going down, and I decided to move my stop loss up to break even. Right, great. So instead of taking a full loss, right, I've now break even. Then the next trade, break even again, right? So the market goes up, it comes down a little bit. I decided to move my stop to break even. Right, so then the next one, I lost. Right, the market never really went up. It just reversed and dropped right away. Didn't even go up at all. So now the same one, the same trade, the last trade, I won. Right, so now because we become a better trader, we learn how to read the market better, right? So out of 5 trades, right, we won 1, same, we still win 1, but we reduce our risk for 2 trades. So it break even, we didn't lose anything over here. In fact, right, we only lost, right? We lost 2 trades, we broke even on 2 trades, right? So what? $1,000, which is minus 400, we made $600. You following me? Right? So now this is right. This is good already, right? You should be already profitable already, right? Then as you go on, right? Same thing. You got 1 is the risk. You aim 1 is to 4, 1 is to 3, 1 is to 5, 1 is to 8, 1 is to 3, 1 is to 2.5. Now as you go along, right? First trade just reversed down. You lost 200. Second trade went up, hits your take profit. 1 is to 3. Not aiming too far, honestly. 1 is to 3 is actually pretty realistic, right? You make 600. The next one, we tried to aim for 1 is to 5. It couldn't go up to 1 is to 5. Went up to 1 is to maybe 2-ish. We went back down. We hit break even. Okay, we got lucky. 1 is to 8. Okay, sometimes it's more than luck already because we already plan our trades, right? But we hit the big one. 1 is to 8. Fantastic, right? And then the next one we lost. Well, even if we lose, right, we only lose the standard 2%, which is the $200. We don't lose $300. We don't lose like $1,600. No. We always, which is why the risk is 1 is to something, right? We always lose the same amount, $200, for example. And then the last one, we won. Now, here's the thing. This is what? As we go along, this is the pro trader. Okay? In 6 trade, right? He won 3, he lost 2, he broke even 1. Right? So 1,006 plus 500 is 2,001. 2,001 plus 600 is 2,007. 2,007 minus 400, 2,003. So in 6 trades, he made $2,300 off his capital of $10,000, which is what? 23%. 23% gain in 6 trades. Now this is crazy. I'll tell you why. Oops. You are investing, I don't say trading, I say if you are a typical investor. A 23% gain is sick. A 23% gain by any standards is fantastic. It is fantastic, right? 23% gains is amazing for most of the stocks out there. It's a fantastic year. The S&P don't make 23%, rarely. Usually it's about 10-ish, right? Sometimes there's good year, but averagely it's about 10-ish. You make 23%. But this is only 6 trades. It's not even your set of 20 trades, right? So this is why the 1%, the 2% of the traders out there make really good money. And then this is the high level, right? And then you have the pretty profitable trader. So the profitable trader is about 10, 15, 20%, right? 10, 15%. They're the profitable trader, but they are at the lower end of the profitable trader, right? So then this is the floating trader. Their win rate is about 50%. If they stay disciplined, they will be profitable. So thank you so much for watching. If you enjoyed this video, please give it a thumbs up, right? It really helps to keep the channel growing. And if you are new here, don't forget to hit that subscribe button and turn on the notification bell so that you never miss an upload. So we also love to hear from you, right? Drop a comment below and let us know what you think or what you'd like to see next. I mean, your support truly means the world to us. It keeps us motivated to bring you awesome content every week. And if you're keen to learn more, I've created a free 5-part comprehensive training where I show you exactly how I trade using my lifestyle method. Link in the description below.